Tesla's Robotaxi event is coming just around the corner in October. That's when Elon Musk will reveal Tesla's plans. The potential for this to disrupt is not just what most are thinking, a single industry like Uber's ride-hailing business. In fact, you can now see Uber reacting with new partnerships with Cruise for autonomy and Chinese automaker BYD for cars. But rather, Tesla might also be able to disrupt Amazon. Yes, Amazon. We'll show you how. We'll also compare whether it's better to invest in Tesla's Robotaxi business versus starting an Airbnb business. And finally, we'll review the $100 billion cash-burning furnace of Lucid, Rivian, and Ford. Our guest today, who did all this work, is Cern Basher. Cern is a chartered financial analyst. He's currently running his own investment advisory firm called Brilliant Advice, providing wealth management services. Thank you for joining me again, Cern.
Hi, Herbert. It's great to be here.
Lots of great topics. These are the topics you research, you do deep dives, you produce these wonderful tables and graphs. And so let's get started with Uber. We know that Uber just recently announced, just yesterday, 2 days ago, they announced that they have a partnership with Cruise for autonomy. It's something they're going to launch next year, limited numbers. They didn't really say how many. But they did that right after they announced about 3 weeks ago that they have a partnership with BYD, letting the drivers buy BYD cars, not in the US, all the other countries outside of the US. But let's compare what Uber situation is. So you've got this slide here first.
Yeah, the challenge with Uber is they have accumulated about 30 billion in losses. So think of it as the opposite of retained earnings. Their accumulated deficit now is about 30 billion. Now, I would say in recent years, recent quarters, they have started to make some progress on that, and they're starting to make a little bit of money. The question is it too little, too late before they themselves get disrupted by autonomous vehicles?
Gotcha. And then do you think that they're pretty desperate right now? I mean, you've seen the Uber CEO, Dara Khosrowshahi. He's been selling shares. He's just recently, last week, sold 10% of his shares. And then, of course, these announcements and partnerships. What do you think that is happening with them at this point?
Yeah, there's no doubt that Uber is concerned about this autonomous future. In some ways, you could argue that they're well positioned, but they're not well positioned necessarily with assets. They don't have the vehicles. They don't have the technology. They have to rely on others for that.
Yeah.
And so hopefully they can find some partners. And I'm sure that they're hopeful that they can attract Tesla as a partner. It remains to be seen whether Tesla needs Uber as a partner. Now, the one thing that Uber does have is a lot of experience in pricing, in the marketing and attracting customers that Tesla does not have yet. And the question is, will Tesla go that alone, or will Tesla decide to partner with Uber in some way?
Okay, so disruption of Uber's ride-hailing business is something that Uber is concerned about. Most people see it happening. Uber's trying to find partners. We'll come back to Uber as you compare it to whether or not Tesla can even, not Uber, I'm sorry, Amazon, whether Tesla's ride-hailing business could actually disrupt Amazon. That's going to be an interesting discussion. But let's start with your analysis here of whether or not you said here, would you invest in a robotaxi business, a fleet of robotaxis, Teslas, or would you put that money in Airbnb? It's interesting. What is this image? Where'd you get this one from?
This is another image from Grok. And I asked Grok to create an image of Airbnb versus Robotaxi, and it put the Airbnb logo on the Robotaxi. So Grok is being rather hopeful there, I think.
Okay. Well, it is a very interesting comparison. I love this theme that we're talking about, right? Is can Tesla's Robotaxi disrupt? Everybody thinks it's just ride hailing, but in fact, it could be Amazon. It could be Airbnb. It could be, even Starbucks, by the way, because Starbucks took off because it's supposed to be this third place. People meet in that place. And by the way, I do think this is the shape, like not the shape, but this idea that you're going to have four people, two facing each other, sitting in a robotaxi for Tesla. Okay, so this is your thought process. This is what you asked people to challenge here. Thought you said, okay, Airbnb versus Tesla robotaxi. What is financially more attractive? If you had this choice, what would you do? Would you take your hard-earned capital, buy a house, and rent it out on Airbnb, perhaps a long-term rental, or purchase as many Teslas as you can and add them to the robotaxi network? What is likely to be the better financial decision? Let's take a look. So you go ahead and tell me your analysis here.
Yeah, so I started off taking a look at the overall US housing market just to sort of set the base here. So there are about 130 million housing units in the United States. About 90 million of those are single family homes, about 32 million multifamily or apartment properties, and about almost 8 million mobile homes.
Wow.
Of those properties, 130 million, about 45 million of them are rented out. Now, that's not all on Airbnb. Some of these are longer term rentals. So about 35% of the housing units in the United States are offered for rent. So you can imagine this is quite a source of income for all those people that own those properties. And so what I wanted to do is sort of see, okay, we've got a little bit of data from Airbnb about how much their hosts earn in renting out their properties. How might that compare to the prospect of owning a robotaxi, either one or even a fleet of them, and what the economics might look like for that?
Okay. Let's take a look at Airbnb's
So
host cash flow
Airbnb has
return.
told
Yeah.
us that
Yeah.
in 2022, their US hosts earned about $22 billion by
Nice.
opening up their home to travelers, right? And they say that the typical host, which is the median amount that the hosts have earned, is $14,000 per year in 2022. So that's a decent chunk of money,
Yeah.
right? That
It's a lot.
seems like a nice little bit of money for folks. Now, obviously, there's a wide range around this. There are some people that are making a lot more, and some people making a lot less. So this is a little bit of a stab in the dark. But I decided to put this little table together down below and just kind of explore a couple things. If the median property value in the United States is around 400,000, so that middle row, then these Airbnb hosts are earning about 3.5% cash flow yield per year, if that's the right comparison.
Mm-hmm.
Now, certainly there are a lot of people not renting out homes. They might be renting out even just an apartment or a single bedroom. So to look at the median property value may not be the right number. So if it's half of that, if it's 200,000, then they might be earning about a 7% cash flow yield per year. Now, the one thing we should note here is that this doesn't include all expenses. This is just the 14,000 that they get from Airbnb. That doesn't cover their property taxes or their utilities or maintenance or anything like that. So, just to get a rough idea, maybe people are earning between 5, maybe 10% on the value of their Airbnb property each year by using that service.
Okay. That's fair.
Okay. So let's compare that then to what it might look like for Robotaxi. And as you know, I've built some pretty extensive Robotaxi models, and I'll share the assumptions that went into this one in just a second, but let me first share the results. Let's say that you were able to earn $20,000 a year, so the middle row in this table, on putting your vehicle in Tesla's Robotaxi network. Okay, and again, we'll get into the assumptions of how I arrived at that number. If your vehicle is worth 50,000, that's a 40% cash flow yield. And that $20,000 number, by the way, includes all expenses, insurance, charging, maintenance, depreciation, cleaning. That's an all-in number. Now, a lot of people's Teslas are not worth 50,000. Some of them might be worth 25,000. So double that number and you're at 80%. Now, the assumption here is that you put your vehicle in the network every day. Now, for a lot of folks, that's not going to happen. So let's say you put it in the network 25% of the time. That gets you to the $5,000 number per year, the first row on the table. Okay, and if the vehicle's worth 50,000, then you've got a 10% free cash flow yield. If your
Mhm.
vehicle's only worth 25,000, that's a 20% free cash flow yield for just
Mhm.
putting your vehicle in the network 25% of the time. Now, let's explore some of the assumptions here. I think I've been extremely conservative. That $20,000 in the middle of the table comes from the chart above
Mhm.
at a 30% utilization rate in the Robotaxi network. What does that mean? 30% utilization means that the vehicle is moving 30% of the time. i.e. 7.2 hours a day. Okay. Now, moving doesn't mean that it's earning money. Moving might mean that it's got a fare paying passenger or it's just moving to reposition itself. So 30% is a pretty low assumption, again, including a lot of miles that are not being paid for. Okay. So the robotaxi network looks very attractive, particularly if the utilization rate is even higher than that 30%. But I'm just charting out here the 30% utilization in that table. Now, what are the underlying assumptions to get to that $20,000 a year? Let's go to the next page. And the key one is cost per mile, a fare rate of 50 cents per mile and a base fare of $1 in blue. Okay. Compare that with Uber and Lyft, who are 2, 3, 4, even more dollars per mile on their service. So this is a pretty attractive number, pretty low number. And I don't think that Tesla will have to offer fares even this low initially. But I'm trying to project out a little bit and say, okay, at some point the fare will come way down. A lot of people will probably be incentivized to put their vehicle in the network. What will this look like when it's 50 cents a mile? And again, this is an average. There'll be times when it's higher and times when it's lower. And you can see the other assumptions, traveling at 25 miles an hour and that kind of thing. 40% of the miles are empty. Therefore, there's no fare for 40% of the miles that are traveled. And so on. So there's a whole host of assumptions that go into this, but I think these are pretty reasonable. The one thing I also do in my model is I charge for idle time, so that if somebody falls asleep, that you don't have the problem of trying to kick the person out of the vehicle. You just keep charging them as though the vehicle was still traveling at 25 miles an hour.
Yeah.
That works out to about 21 cents a minute. So the conclusion here is that putting your individually owned vehicle in the Tesla Robotaxi network should prove to be a very attractive financial decision. And for all the people out there that say, you know what, I don't want somebody else in my vehicle, right, going to mess it up. Well, number one, plenty of people have people in their homes, right? Airbnb has people earning $22 billion a year by renting out their homes. So why wouldn't a good number of people do that with vehicles? Well, they will, and particularly because the economics are so attractive relative to Airbnb. I would even take it a step further, Herbert, and say that as people see the economics with this, as the robotaxi network starts up and sees how profitable it could be, that they may decide to sell their rental unit and buy a robotaxi or 2 or 3 or more. So actually, it could disrupt the rental market as well until that market level sets, right?
Yeah, I guess you have to find out what percentage of all those homes that are owned are rented, which you've got, but then what percentage is owned versus no. I'm trying to get investment. Like they bought it specifically for rental.
Certainly, there would be a large portion. I don't know the percentage, but I would imagine a good portion of the Airbnbs are investment properties. It's not just somebody's home that they're renting out.
The other concern I had was you used the number $50,000 for the Tesla car, which is what is today. If I bought a Tesla today, if I own a Tesla today, Robotaxi platform comes, I put it in, that makes sense. But when Robotaxi comes, I believe that values of Teslas will skyrocket. And so 2 years from now, you want to put your car in or get a car into the Tesla network, and you don't have a Tesla, you want to buy a Tesla, it's not going to be 50 grand at that point. And be 100 grand. We did an analysis on this when one of your shows before. Could even be 200 grand.
We did. We did. So I think the value of a money-making asset materially increases, right, as it makes more money. So right now, the vehicle is a depreciating asset. It'll turn into a money printer. Therefore, the value should go up. So yes, what may happen is if that value goes up, then those cash flow yields come down to some level that makes sense relative to other types of investments out there, whether it's Airbnb or something else.
Yeah.
So you could argue that what I've shown here is because the cash flow yield is so high, that there has to be some adjustment either a flood of people come in and push those yields down, or the value of the asset increases so that those yields come down that way too.
Mhm.
There's different ways of getting there, but yes.
It's interesting. So we talked about most logical robotaxi will disrupt ride-hailing business. That's the most logical thing, and
Mhm.
taxis. Okay, and maybe even other transportation. That makes sense. However, it could also disrupt Airbnb. Not as direct, right? But do you think that people will actually like hail a robotaxi, work in the robotaxi? Some people actually live in a robotaxi. It doesn't make sense, right? It's not, they're not going to live in it, but they might use it as instead of renting an office, they might just, hey, let's meet in this robotaxi and we'll talk as it drives us around or something like that. I wonder what
Yeah.
percentage. Small.
I think there's lots of little disruptions like that. Certainly, if Tesla charges for idle time and doesn't try to kick people out when the ride's over,
Yeah.
then what's to stop you from finishing your conference call, your call with your colleagues, call with your family in the
Yeah.
vehicle, or even just hanging out in the vehicle by yourself or somebody else, or particularly if you're going to do overnight travel, just sleep in the vehicle. You don't
Yeah.
have
Like
to
a
pay for
train.
a hotel, so it
Right.
disrupts hotels,
There you go. That's right.
right? I think
Yeah.
hotels at major destinations do
Yeah.
fine, but hotels along the way may become less necessary.
Yeah. That's why when you showed this, I believe this is what Tesla's robotaxi will look like. Obviously, it's going to be cyber inspired, so it's not going to look like this, but the idea that it's going to look like a Zoox, where you got these sliding doors, you walk in, there's plenty of space. He called it a mobile lounge, and you might be able to sleep in it. And maybe the very first version is smaller than this, but eventually you could extend it, especially with unboxed model. You can have more middle sections to make it bigger. And so you could possibly, I don't know, maybe in the future, we'll see, put in beds or even just comfortable seats that lie down. Um,
I like
right? I
that
mean,
idea too, because when
yeah.
we think about disrupting Amazon, then you want a vehicle with some volume inside, potentially to carry packages or other items. So ideally, a vehicle with larger volume would be better if you're going to potentially use it as a delivery vehicle of some sort as well.
Well, let's talk about that next. So you've got this, which is you think that Tesla's robotaxi, and if you combine it with XAI, you can disrupt Amazon. So, okay, what are we looking at here?
Yeah, this is a longer term, kind of bigger idea, but I think it's worth exploring or starting to explore it. So, autonomous vehicles certainly could be used for delivery vehicles. We just mentioned that.
Yeah,
Humanoid robots could be used to deliver packages from the vehicle to your door. Humanoid robots could also be used in the warehouses, distribution centers to load, unload, sort, etc. Amazon already uses perhaps up to 1 million robots of various sorts right now in their distribution centers. So that's already happening, right? Um, but then you think about AI. So a couple things here. One is right now, Amazon and others do quite a bit of revenue from advertising. They are advertising to us, humans, to influence our behavior. In a world of AI, you don't need to advertise to humans as much or potentially at all. What you want to do is make sure that the AI and the algorithms that they use are aware of the product. So you kind of need to quote unquote advertise to AI, which is not advertising at all. It's very different. So I foresee a potential disruption to Amazon's ad revenue business, which is a growing business. Secondly, Amazon's AWS, their cloud computing service. Amazon had a surplus of computing power. They discovered that if they lent that out to other people as a service, that they could make a lot of money. It turns out that's one of Amazon's most profitable lines of business. However, the cloud computing industry is undergoing a transformation right now from a CPU-based business to GPU, or from traditional cloud computing to what NVIDIA calls an AI factory. Well, who's building an AI factory? XAI is, and others. Meta and Google and Amazon are too, as well as Tesla, frankly. So XAI and Tesla may find themselves in the same position that Amazon had, where they have this surplus of compute at times that they may want to try to optimize, and therefore that could become a line of business for them as well. And in that sense, they'd be competing directly against AWS as it transforms itself to an AI factory. So, every aspect of Amazon's business now potentially could be disrupted by Tesla and or XAI together. Again, this isn't going to happen overnight. The other longer term thing too is that Amazon makes quite a bit of money by housing products from other companies. They're kind of just a distribution center from other sellers, and then Amazon fulfills those orders. Well, with humanoid robots, you could actually have the bots build some of those products in the local markets. So now instead of shipping cheap products from China, you could actually have them made around the corner as they're being ordered, kind of made to order kind of products.
Mhm.
And you wouldn't need maybe the massive distribution centers that Amazon has today if you've got kind of a bot factory that can just make things as they're ordered. And that's the beauty of a general purpose humanoid robot, is it can do anything. Again, that's much longer term. We're not anywhere near that yet.
Mhm.
Um, but just every step along the way, everything that Amazon has built, I can see potential disruption for.
Yeah.
And it might be
Yeah.
15, 20 years from now, but still that we're heading in that
Yeah.
direction.
Yeah, I understand that the way Amazon disrupted retail was these retail, like say Walmart, Target, and all these guys, right? All these retail stores, they had to have expensive retail locations in the city. And then they had to inventory it at a warehouse, deliver those inventory to those retail stores. Amazon created these cheaper distribution centers, automated it, and of course, automated the ordering, which is the killer app. And then that's how they, just made it so much cheaper. So what you're talking about is that if you don't need these, even in the middle warehouses in a cheaper location, you can have smaller amounts or even less of them distributed throughout. That can disrupt Amazon. I'd love you to do a full analysis if you're interested in transportation business, right? You've got the airlines, of course, then you got the long haul. I've heard Elon say before that Tesla Semi will disrupt short haul, but if it could theoretically, if you actually have a daisy chain, or what do they call that, where they're all a convoy, you could actually disrupt trains.
Mm-hmm.
And there was actually a statistic of, it can actually be 30%, or if they can lower the cost by 30, well, I can't remember the number now, but it could match a train or be cheaper than train.
Yeah.
You're disrupting long haul. And then this is the final mile, the local final miles with these delivery vans going from one place to another. So yeah, there's a huge business there. So there's no doubt right now they're going to do robo trucks, and then they're going to do cars. Why wouldn't they do these middle vans? That's going to come soon, right? Yeah.
Yeah. The other opportunity, I think, too, is sort of AI to interface directly with manufacturers, right? So why have a middleman at all if your AI agent can aggregate my order, your order, everybody's order, and then negotiate something with the manufacturer and say, hey, I've got 1 million orders for XYZ.
Drop shipping or something, or
something,
build on command.
Yeah. So the human is going to be taken out of the loop almost everywhere along that chain. So the need to store a lot of things in distribution centers and Amazon warehouses may go away. Now, it's not like Amazon won't have this opportunity as well.
Right.
So they won't be standing still either. I'm not suggesting that Tesla just takes over everything that Amazon does. In fact, it may be a tall order and it may not be worth it.
Yeah.
But it is interesting to think about.
Yeah, you don't need disrupting Amazon is big challenge. They are such a behemoth and they're so technology forward. But there's a lot of business outside of Amazon that you can disrupt, basically shipping, transportation, and now product sales, right? These retail sales. Okay, so let's talk back to the business. So we've talked about disrupting. Robotaxi is going to disrupt ride hailing. It's going to disrupt maybe some sort of version of Airbnb, or at least you're just explaining that people might want to invest. If you're interested in investing in Airbnb, you want to invest in Tesla's cars. That's lucrative. It can disrupt maybe Amazon or shipping or transportation. But of course, the most logical one is actually it disrupts auto. And Elon has said several times, right, that if you are an automaker and you're trying to create your EVs and you're trying to turn into a profitable business, but if you don't have robotaxi, all that doesn't matter anymore, anyways. But in the meantime, they can't even create the EV in the first place. So tell me about this presentation you have on the $100 billion cash furnace. Beautiful photo.
Yeah, again, this is from Grok. As you can tell, I'm having some fun these days playing around with Grok.
Yeah.
I asked it to create a giant cash furnace, and this is what it came up with.
It's almost like they're worshiping the cash. It almost looks like a Buddhist temple or something like that, or a temple.
Yeah. Yeah. So when we look at the state of the EV industry, if you just go to the next slide, Herbert. So this is what's usually presented, right? You look at how many vehicles Tesla sold, how many vehicles everybody else sold. This is for the month of June in the United States. Mm-hmm. Tesla sold 61,000 vehicles, and the other companies collectively sold 47,000. So people create sort of, Tesla's got XYZ market share. I think in this case, it's like 55% or something like that.
Yeah.
In the month of June. But you're leaving out an important thing. It's not just market share that matters. Yeah. And so I felt compelled to make an annotation to this chart. And if you go to the next slide, here it is. Right? The big distinction is that Tesla is selling those 61,000 vehicles at a profit. Now, albeit a lower profit than what they were a few years ago, but nonetheless a profit. And the other companies are what I refer to as the cash furnaces.
Yeah.
I believe every single one of those companies is losing money, and many of them a lot of money, on selling their EVs. So that's this idea of, they're just burning money. Yes, they're selling you a car, but they're not selling you the car for what it costs them to make. So this is unsustainable. Now, it can go on for a while. The question is how long, how much pain and how much money do they want to lose, right? But at some point, it will end. That's the definition of unsustainable. It has to end at some point. And Elon has mentioned this a couple of times recently, that this is temporary. Right? So let's just look at how bad it is. First of all, just to kind of level set, this is Tesla's auto gross margins since the founding of the company. And they've been positive all the way through, except for one little blip in 2012. Okay? But overall, they fluctuated, but it looks pretty good. Compare that with Rivian and Lucid. Right? Their gross margins have never been positive. In fact, they're massively negative. Now, gross margin is one thing. This doesn't take into account all the expenses that a company has in running its business. This is like the cost to, the price they sell the car for, and then the cost to make it. It doesn't include other corporate expenses or CapEx or other things like that. It's just the difference between the price of making that car versus the price they get for selling it. So right here, Tesla is head and shoulders above everybody else if you just look at this one chart.
Well, you're comparing it only just at this point to the pure play EVs.
Yes.
And then the question I have for you is, against these two, is it because when Tesla initially came out, there was no competition and they went with the premium Roadster, they went with the Model S, there was nothing out there. So they were able to charge pretty expensive prices and then eke out their margin, versus these guys come out when there's so much options, nobody was going to pay them. They're limited how much. Or as Elon was saying, he's so focused on cost reduction. And he has said that if Rivian and Lucid, specifically these two, he has said, if they don't cut costs significantly, they're not long for this world, was the words he had used. Is that it, the cost, or is it the market?
Well, Lucid's selling a premium vehicle, right? Also, I would say Tesla blazed the trail. Tesla created a market where there was none. Essentially, there might have been a few EV hobbyists out there, but there was no mass market EV company. Tesla blazed that trail, and they made a lot of mistakes along the way. Right? You read Walter Isaacson's book, and it's mistake after mistake after mistake that they made. And so, in some ways, Tesla's made it easier for these companies. They've shown the playbook and how this works.
Interesting. Yeah.
It's hard. It's still not easy, even if you know the playbook. Yeah.
No, so it's mostly cost management then. Okay.
Yeah.
So this is you're basically 18.5%. And in fact, even compared to BYD, the only other company that possibly is making profit. And then of course there's other car companies in China that are being fully or majorly subsidized by China. So it's hard to know. But only BYD is one reporting profit regardless. So
That's right. So let's just kind of level set and show what success looks like.
yeah.
So this is Tesla's cumulative operating cash flow since 2012, their IPO date, I believe. And you can see that they lost money for a long time, but not massive amounts, right? There's a couple 150 million. There's some bigger numbers in there, but the cumulative losses weren't huge on an operating cash flow basis.
Mm-hmm.
And then they hit an inflection point and they started making money, and since then, the rest is history. But operating cash flow does not include the cost of building factories. So if you go to the next page, you also have to consider how much it costs the company to make the factories to build the vehicles that they could sell. Right. So you have to look at the capex, and Tesla has invested almost 45 billion since the IPO in capex. Right. So a lot of reinvestment. So if a company is going to compete against Tesla, chances are they're going to have to invest something on this scale as well.
Mm-hmm.
Right. A big investment. Now, if you take the operating cash flow, take out the capex, you get to free cash flow, and that's the next slide.
Mm-hmm.
So Tesla did lose about $10 billion at one point in free cash flow. They were in the hole, $10 billion. And then they turned the corner. They had enough volume. They turned the corner. The cost structure was the right way, and they started making money. Kind of in fits and starts at first, and then solidly for a while, and then they've hit a couple bumps in the road along the way here recently. But overall, they've made about $10 billion in free cash flow since the IPO over the last 12 years.
This is the Model 3, and then this is the Model 3 NY here. Boom.
Yeah, Model 3 starts, I think, in the summer of 2017. So that's what allowed them eventually to turn. It wasn't immediate. There was still a few rough quarters, and they went through the production hell phase. So yeah, it wasn't easy for Tesla. Okay, so that was Tesla's experience. Now let's take a look at Lucid. Here's Lucid's average vehicle production cost. Now you could argue that they've made great headway here. Initially, it cost them $1.2 million to make their average vehicle in Q4 of 2021. Okay, that's not why they just started. Super expensive. But you can see that they've gotten the cost down now to about $196,000 per vehicle. Okay, production cost. So that's great.
Wait, that's $196,000.
$1,000.
Yeah, perfect.
So much it costs to make an average Lucid.
Yeah.
Okay. Now here's the problem. If you go to the next page, they're selling them for an average price of $84,000.
Yeah.
So they brought the price down as well as the cost. And so it's the difference between these two that matters. And the next slide shows the average loss per vehicle. And they're still losing about $113,000 last quarter on selling their vehicles. Okay. And this is not, this is the gross profit. This is before a whole bunch of other expenses. So, it's a difficult business to make any money in EVs, and Lucid is certainly showing that. If you take a look at their free cash flow on the next slide, solidly negative. More negative than Tesla ever was. Okay. Improving a little bit here and there. They lost $1 billion in free cash in the first quarter of 2023. And last quarter, they only lost $741 million in free cash flow. And as a reminder, free cash flow takes into account CapEx. So this is a more complete look at how the company is faring. Okay. Now, let's look at Rivian. Rivian's free cash flow was about $1 billion last quarter, negative $1 billion. So they're burning more cash than Lucid is.
Mm-hmm.
They're selling more vehicles too, but they're losing more money. So this is a problem. And the question is, can these companies turn the corner and begin to, can they turn off this cash furnace? Right? Can they convert their cash furnace into a money printing machine like Tesla did? And it's not looking so good.
Mm-hmm.
Here's another company, VinFast. Their free cash flow, losing about 700 million in the last quarter. This is Q1 of 24. I'm not sure. Well, it's recent. Maybe they're on a different sort of quarterly system.
Mm-hmm.
But this is the most recent data we have for VinFast. Now, the problem is a lot of the companies that make automobiles like Ford and GM and others, most of them do not report their EV segment separately. So we don't really know the health of their business. Now, to Ford's credit, they give us some information. So on the next slide, you can see the losses from their EV sales, and this is earnings before interest and taxes. So it's not cash flow, doesn't take into account capex, but still it gives us some clues. They're losing 1.1 billion last quarter.
Wow. Mm-hmm.
Okay, and that's an improvement. They lost almost 1.6 billion in Q4 last year. So as these companies attempted to scale up, they lost more and more money. And they didn't hit that inflection point that Tesla hit with the Model 3. Right. And so Ford and others now have pulled back on their EV plans. And Ford now is facing a $1.5 billion, a $400 million charge, I think, this quarter. And I think they said they're going to spend another 1.5 billion in additional charges in coming quarters.
Yeah, they straight out said that they're canceling their 3-row SUV, completely just gone, that EV. And then they are delaying the next gen Ford F-150 truck, the next generation of their EV for the truck, till 2027, late 2027. And they're focusing on just their commercial vehicles and hybrids. So they are pulling back significantly.
And they also said, I believe, that they wouldn't create a passenger vehicle unless they could be EBIT positive within 12 months. And the likelihood of that is next to nothing.
Yeah, exactly.
Right. So that's even hard for Tesla to achieve with a new vehicle.
Yeah, they're all doing this. GM fired a lot of people in China, and they fired a lot of people in their software divisions. They're all pulling back because they can't continue all this losses, massive losses.
Yeah. So to hit this home a little further, I compared Ford with Tesla at about the same point in their life cycle.
Yeah.
And this is Tesla in Q3 of 2016 sold about 24,800 vehicles.
Mm-hmm.
Ford in Q2 of 2022 sold about 20,000. Didn't sell it to buyers necessarily. They pushed those vehicles to their dealers. So those are called wholesales. Yeah. So it's a little bit of an apples and oranges comparison, but we don't actually know how many vehicles Ford sells because they only report the sales to their dealers. Yeah. And that's a number that Ford can kind of control quarter to quarter. Mm-hmm. Nonetheless, if we treat those as similar, then we can map out the progress that Tesla had from 2016 through to Q4 2019. The yellow arrow, by the way, is when the Model 3 was introduced. Okay. And you can see that a couple, 3 quarters later, that was a material change in the company. They were able to get out of some financial challenges that they had and really change the nature of the company. Yeah, Ford, I've heard you can see in terms of their deliveries is kind of bumping along and not really showing any growth at all.
Mm-hmm. I've been using this number because as I interviewed a few people, I think I heard this number from Monroe and Associates, whether it's Sandy or from Corey when I interviewed them. But what I heard was that in order for you to be scaled at scale of a car business, you need to be making 200,000 vehicles per year. Mm-hmm. So by quarter, that would mean 50,000. Mm-hmm. 50,000 vehicles per quarter. So when you hit this number right here, this arc here, then you can start really getting scale and starting to reduce your cost per vehicle and increase your gross margin. That's my understanding. And all these car companies are like 1/10 of that. They're not even near that number, except for a couple companies that are getting close.
Yep. Yep. And so the next slide shows revenue. And here's the discrepancy is even bigger, right? So while Tesla had a similar number of vehicles at the beginning that Ford did, Ford's revenues was lower,
Mm-hmm.
right? When they were both selling around 25,000 vehicles. Tesla had steady growth, and then the Model 3 hit, and the growth took off, with the exception of the production hell period that's shown there. Ford has not really had any traction in terms of revenue growth from their EV business. In fact, you could argue that there's a flat line or maybe even trending down at this point. Okay. And then the next one is EBIT, earnings before interest, costs, and taxes. And Tesla, yes, they were struggling at this point too, right? It wasn't easy for Tesla. I'm not suggesting it was. They were losing, 500 million or so per quarter. And then the Model 3 was introduced. A couple quarters later, they were able to get enough volume production, and they were able to turn the corner again. Then they hit production hell. But after this is when they really turned the corner. I didn't graph that out because it makes the Ford numbers look even worse.
Mm-hmm.
But Ford, you can see, is solidly losing, $1 billion plus a quarter. For them to only lose 500 million would be a massive success at this point.
And again,
Right.
I mean, that's probably timing, right? I mean, they came up with their EVs, but there's options. There's the Model 3 and Model Y. You got all these other car makers coming out, and then they were doing well with their F-150, but now the Cybertruck is coming, and so what's going to happen in the future here is their F-150 is not going to be as successful as it used to be.
That's right. The Mach-E had some initial success, but I think that customers didn't respond that well to it. They haven't really sold a whole lot of them. Certainly compared to the Model Y, it's not anywhere close. And I think the same will be true of the F-150 Lightning. When you put up against the Cybertruck, it just doesn't compare well.
Mm-hmm.
And then the final chart in the series, Herbert, is the EBIT margin. And again, you can see the separation. So at worst, Tesla's EBIT margin was minus 20%, which isn't great. But Ford's EBIT margin is minus 100%.
Yeah.
So they've got a bigger hole to dig themselves out of in more ways than one. Okay. So the next page shows Ford's cumulative losses. They've lost, according to AJ, about $9.3 billion.
Wow, that's a huge investment. Yeah.
Right.
I mean, they tried.
Yeah.
They tried.
And AJ puts out this great chart. It's shown on the next page of the free cash flow history of the pure EV makers. And in this case, he's also added Ford. Mm-hmm. Now, the numbers on the previous page are not free cash flow for Ford. It does not include CapEx. So Ford is kind of in lucid territory in terms of losses. And if you add back CapEx, it may be even closer to Rivian, or maybe in the middle between Lucid and Rivian in terms of how much they've lost.
So, okay, so they might have invested way more than $9 billion, like closer to $20 billion, if you do.
Well, they would have invested quite a bit of money in factories to build the products, sure. Right? That's not free. Yeah. They didn't just convert a ICE vehicle line to EV.
Yeah, so pulling back now is interesting. I will say this is what I was thinking in my head, and tell me if I'm wrong here. It's hopefully I don't take us off a different direction here. But if you're an EV maker and you had to try to create EVs in the market, which many of these guys did, a lot of the pure plays did it, a lot of the legacy autos are doing it, but they're losing significant money. Now you find yourself today and you're watching Robotaxi develop autonomy. And you're going, okay, a few years ago, it was like maybe 5-10 years from now, let's keep working on our EVs. But today you're going, maybe what I need to do is partner with like create EV ready cars as autonomy ready cars, not just EV only, and kind of like jump the gun. I don't know. I might be completely wrong there, but I'm just saying you're chasing the wrong race at this point.
Yes.
So why drop off and then partner with Tesla and then rerun? I think we've heard Ford has a Skunk Works project. They might be doing that. I don't know.
They better be, because if we are moving to a world of autonomy, you are, as a consumer, you're no longer buying a vehicle. It's no longer reflects your own personal choice and taste etc. So in a consumer product world, you need variety because people want to be unique and they want to feel special or whatever, right? You don't want to drive the same vehicle as your neighbor or whatever it might be. But in a world where it's one of rides, you're not selling a vehicle anymore, you're selling a ride, you're selling an experience. The outside of the vehicle isn't really going to matter. Just like when I get a ticket on a train, a bus, or an airplane, I don't
Right.
really care what those things look like.
Yeah.
I want them to be safe, and I want the inside to be very comfortable.
Hmm.
The only reason I fly certain airlines is because they're better than other airlines inside the plane. They're flying the same plane, right? But it's the experience inside that's where the differentiator is. And the same
Hmm.
thing is going to happen with vehicles. So all these companies are trying to develop unique EVs. They have missed the boat entirely because that's not where the market's going to be. It's going to be about experience. And the sooner they realize that, then there's some hope for survival. If they don't, then they won't
Yeah.
survive.
That's what I'm saying. You need
Yep.
to start designing robotaxi first vehicles. The one that we showed at the beginning that looks almost like a van or something. Lounge inside. Work on that instead of
Yeah.
no steering wheels, and just partner with an autonomy company because who knows, maybe they're still thinking it's going to be 10 years away. But if they don't right the ship now with this, and you're pulling back, by the time that they do right the ship, let's say, oh, okay, we're going to, they're all saying this, right? We're all going to start reinvesting again in 2027, 2030. Whoa, 27, 2030. The world might be very different by then.
It's game over by then.
Yeah.
And just to put a bow on our previous discussion, if you go to the next slide,
Yeah.
Taking AJ's data, and this is AJ's work here, and the next chart, Tesla has made close to 11 billion in cumulative positive free cash flow.
Mm-hmm.
We believe that they're the only automaker that has made any money on EVs, with the exception perhaps of BYD, but we don't know. Every other automaker we believe has lost money, and you can see them kind of ranked there. Rivian has lost almost 22 billion, Lucid 10 billion, Ford before capex lost 9 billion, NIO 8.5 billion. These are the pure EV makers. Factor in Volkswagen and GM and Hyundai and all these other companies. So these pure EV makers here have lost 73 billion just on this chart.
Why is BYD not on this list?
Well, I don't believe we have the data for them to be able to include them in here. They don't report enough information for us to know. Okay, same problem with GM. We just don't know the losses in their EV business. Mm-hmm. It's safe to say, and this is why I titled the slide, $100 billion cash furnace.
Yeah.
It's safe to say and conservative to say that the entire automotive industry, pure EV or otherwise, has lost more than 100 billion trying to make EVs.
Well, these are already 50 billion right here, 20, 30, 40, 50 billion right here. So yeah,
there's so it might even be closer to 200 billion worldwide.
It's worse. I mean, if you think about the Chinese market, there's so many companies out there and they're all losing money, right?
Yeah. So it's staggering. It's really astonishing. I've not seen the number before. It's absolutely staggering when you think about the industry losses in trying to move to EVs. And there's really only one company for sure, and maybe there'll be 3 or 4 survivors, but there won't be many. And as you mentioned earlier, we're shifting rapidly away from making EVs to this transportation as a service business model, which is entirely different.
Yeah, except I've been saying this quite often. In the last week, I've had almost every show, so I apologize for those who keep hearing this, but I've been saying that you need to create an EV because this is a difference between a smart car and a dumb car. Electric vehicles are not just the batteries, it's the operating system for a smart car. And so this is a war between China, who has incentivized and you see that hundreds of car companies form to try to get into this business because they heavily subsidize it, they heavily promote it, they heavily disincentivize it. And so they're all creating not just electric vehicles, they're creating smart cars. And then you can apply the AI to this because it's a computer on wheels. That's what this is. And it's just electrically driven. And then without all the, this whole hybrid thing is so dumb. They might survive, but you're talking about a combustion engine, which takes up all the space in the front. Then you're adding battery on top of it, so even more space. But you need that space if you're creating a robo-taxi first, experience, as we've been talking about, a lounge. So you need electric vehicles on a way to get to robo-taxi lounge experience, and it's a smart car. It's a
Yeah.
bot.
Ultimately, it's going to be a race to who can make EV lounges
Yeah.
at the most competitive price. And it's not about making them to sell to consumers. You and I will not care what the outside of the vehicle looks like.
Yep.
As long as it's proven safe, we want the inside to be the experience. And that's what anybody that's making a robotaxi needs to focus on, including Tesla.
Well, that's why it's called a cyber cab.
Yeah.
And the cyber van has been designed to be, or cyber truck has been designed to be as safe as possible. And that's the kind of the positioning of the marketing. It's also, that's why they're shooting guns at it. They're trying to show you that this thing is just, the toughest truck ever. Now you create a cyber cab, and then people are going to feel safe stepping into that thing, even if it just looks like a tank or stainless steel or some sort of steel. Doesn't have to be exactly what the Cybertruck has, but
you probably also want to create a vehicle that's easy for a humanoid robot to step into.
Well, like we've been saying all the time, it doesn't matter. If a human can step into it, it doesn't matter. That's what a human or robot can do.
Sure, although it would be very difficult for a humanoid to get into a Lamborghini, for example, right?
If it's built like a human, it would not be any difficult. It's just as difficult as you and I to get into a Lamborghini.
Eventually, yeah. I mean, as it stands now, it would be very challenging.
Sure.
But yeah,
that's why I've been saying it needs to be the sliding, van-like doors, minivan-like doors. We'll see. We're going to see on 1010. But what we talked about today, right, is Robotaxi event that comes up. It's going to disrupt the ride-hailing taxi business, but it's also possibly going to disrupt many other industries. You just shared a few. I'd love you to do a deep dive on the shipping, the logistics, the Amazon idea, how much money that is, like relatively, and then also the transportation. How big is transportation beyond just city? If you can automate trucks, semis, right, which is robo trucks they call them, and then you automate enough of them to disrupt the trains. Apparently, that is massive industry. I'd love to know how much exactly.
That's right. Yeah. And I guess ultimately you could say that with the use of Boring Company tunnels, you could disrupt ocean-going shipping. But that's even further down the road. Tunnel boring machines are just not operating fast enough for that to work at this point.
And then Starbucks, I just keep coming back to, what's going on with Starbucks right now? So Starbucks became very, very successful because of, premium coffee, right? They brand is Italian coffee and all that. But it was because it was a third place, because that was the actual reason why it succeeded, right? People will go there. They made it so lovely to sit down, enjoy your cup of coffee. And it was a place, he was arguing, there was no third place, which is home or office to meet you. If I wanted to meet with you, where do I meet you?
Yeah.
I can't go to a restaurant. You got tiny little tables and clutter and everything. Or do we meet like at an office or my home? Yeah. Now they have that. Now, the problem was Starbucks started to focus on the mobile app. And so they completely changed many of their stores to not focus and optimize for the experience anymore. It was like, get your app, get your drunk, get out of here. And so now they're struggling. And so that's why they let go of the recent CEO. He was still very much focused on mobile revenue. So imagine if Robotaxi becomes that third place. You and I meet in a lounge in a taxi. It takes us to some place. We have an experience together. Maybe it drives us through a Starbucks, gets us our drinks, gets our food. we have her. The whole thing is all screens, and we can all do this presentation right there.
Right. Yeah, no, it's a very quiet, private third place that would be great for meetings and that kind of thing. But also the entertainment experience could be second to none inside a robotaxi. And also, frankly, there's vending opportunities too inside the vehicle.
Yeah, I mean, that's what I'm sort of leading to that's what I'm saying. It could actually disrupt Starbucks because it's not only the third place, they can then sell you the coffee.
That's right.
That's what Starbucks
and again,
did.
That argues for a bigger a vehicle with a bigger volume inside as well for that additional things like that too. Yeah.
It's the experience that matters. I think we'll see how this all comes about, right? But Thank you so much, Cern. You always come with fantastic analysis, and then we always come up with more ideas for you to dive into. But this is great. This was a big topic. Robotaxi can disrupt multiple industries, and we just touched on a few. Thank you for doing that, Cern.
You're welcome. My list of ideas and things to research is growing all the time.
It's
so thank you for
all
that.
The time. No, but you are pretty well, bar none, one of the most people to follow, because the financial analysis you do has been great. In fact, you've done a bunch of robot analysis, and a lot of the CEOs of many of the humanoid bot companies look to your analysis. And so you've set yourself apart, and we appreciate it. Thank you so much, Cern. Follow him on X at Cern Basher, and we're doing this as a weekly show, so we'll put him to work and give us more slides next week.
Sounds great.
Thanks, Cern. Talk to you soon. Bye.
Thanks, Herbert.
I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.